Mastering volume spread analysis unlocks market secrets. First, we must begin with Richard Wyckoff's basic laws that reveal secrets behind price moves, providing clarity to the markets. So let's dive in and uncover these foundational principles. The law of supply and demand. This fundamental law states that supply and demand balance each other out over time. High demand and low supply lead to rising prices until demand falls to a level where supply can meet it. Conversely, low demand and high supply cause prices to fall until demand increases enough to absorb the excess supply. The law of cause and effect. This law assumes a proportional relationship between cause and effect. A strong cause leads to a strong trend, and a weak cause leads to a weak trend. Here are uptrends supported by strong volume. Here are downtrends on weak volume, showing volume does not support a downtrend. Here are downtrends supported by strong volume. Here are uptrends on weak volume, showing volume doesn't support an uptrend. Here we can see a significant difference between price and prior volume, hinting at a reversal. The law of effort versus result. This law asserts that the result should reflect the effort exerted. In trading terms, a large volume should result in a significant price move or spread. If the spread is small, the volume should also be small. Any deviation from this pattern is considered an anomaly. These moves are lacking momentum as the effort was large but the result was small. These are unsustained moves as the effort was small but the result was large. To make volume spread analysis easier, head over to TradingView, select Indicators, search for Volume Spread Analysis by TANHEF. This indicator helps to easily identify volume levels including low, normal, high, and ultra for both bear and bullish candles. Signs of strength, signals indicating an increase in bullish pressure. Sign of strength, down thrust. The down thrust requires below average spread, high volume, and a bullpen bar. This indicates strong buying interest at lower prices, suggesting a potential reversal upwards. Sign of strength, selling climax. The selling climax requires above average spread, high volume, a bear bar with a greater than 25% lower rejection wick. This signifies a key reversal point where panic selling is exhausted, indicating that smart money is accumulating. Sign of strength, no effort, bear result. The no effort, bear result pattern requires higher than prior bar spread, lower than prior bar volume, and back-to-back bear bars. This is a large downward move that occurs with relatively low volume, indicating that the selling pressure is weak, suggesting a potential uptrend reversal. Sign of strength, bear effort, no result. A bear effort, no result pattern has lower than prior bar spread and higher than prior bar volume, and requires 2 bear bars in a row. Despite higher selling volume, the price fails to drop significantly, highlighting strong underlying demand that could lead to a price reversal. Sign of strength, inverse down thrust. The inverse down thrust requires lower than prior bar spread, above average volume, and a bear pin bar. This suggests that buyers are overpowering the sellers, likely leading to a bullish market reversal. Sign of strength, failed selling climax. The failed selling climax requires a higher bear than prior bar spread, a higher bear than prior bar volume, where a bull bar occurs after two bearish candles. The high volume during a bearish move followed by a bullish reversal indicates that selling pressure has been absorbed by stronger buying support, suggesting for an upward reversal. Sign of strength, bull outside reversal. The bull outside reversal requires a higher than prior bar spread, high volume, where the lower wick is less than the prior low wick and the close is greater than the prior high, where the bars are bear then bull. This indicates a strong buying pressure, reversing a downtrend and confirming a bullish sentiment with a higher close. Sign of strength, end of falling market, or bag holder. This requires a spread below average, an ultra volume, and a bear bar. This describes panic selling at new lows being absorbed by ultra high volume, indicating stronger buying interest that is likely to stabilize prices and lead to a reversal upwards. Sign of strength, pseudo down thrust. The pseudo down thrust requires a lower than prior bar spread, lower than prior two candles volume, and a bullpen bar. This suggests a weakening of the downtrend momentum with a potential upwards continuation if the high is broken. Sign of strength, no supply. The no supply requires a lower spread than the prior two candles and a lower volume than the prior two candles, and requires a bullpen bar. This indicates a lack of selling interest at lower prices, potentially setting the stage for a higher price rise. Signs of weakness, signals indicating an increase in bearish pressure. Sign of weakness, upthrust. Upthrust requires below average spread, high volume, and a bear pin bar. This indicates that sellers are overpowering buyers during a price rise, suggesting a potential downward reversal. Sign of weakness, buying climax. The buying climax requires above average spread, high volume, and a bull bar with a greater than 25% upper rejection wick. This represents peak buying, typically at price highs, with a potential for a reversal as sellers take control. Sign of weakness, no effort, bull result. The no effort bull result requires higher than prior bar spread, lower than prior bar volume, and back-to-back bull bars. This consists of a large move upwards with relatively low volume, indicating that buying pressure is weak, suggesting for a potential downward reversal. Sign of weakness, bull effort, no result. The bull effort no result requires lower than prior bar spread, higher than prior bar volume, and back-to-back bull bars. Despite higher buying volume, the price fails to rise significantly, highlighting potential exhaustion and a future price reversal. Sign of weakness, inverse upthrust. The inverse upthrust requires lower than prior bar spread, above average volume, and a bullpen bar. This suggests increased selling pressure during an uptrend, indicating possible shift to a downtrend. Sign of weakness, failed buying climax. The failed buying climax requires a higher bull than prior bar spread, a higher bull than prior bar volume, where a bear bar occurs after 2 bullish candles. This shows high buying volume fails to sustain higher prices, leading to a bear reversal pattern, indicating potential downtrend. Sign of weakness, bear outside reversal. The bear outside reversal requires higher than prior bar spread, high volume, a bear bar with a prior bullish one, a high higher than the prior bars, and a close less than the prior low. This indicates strong selling pressure, reversing an uptrend and signaling a potential downtrend. Sign of weakness, end of rising market, or beg seller. The end of rising market requires below average spread, ultra volume, and a bull bar. Ultra high volume at market peaks indicates buying saturation, suggesting a potential reversal as demand exhausts. Sign of weakness, pseudo downthrust. The pseudo downthrust requires lower than prior bar spread, lower than prior 2 candles volume, and a bear pin bar. This indicates weakening upwards momentum with the potential for downward continuation if the low is broken. Sign of weakness, no demand. The no demand requires lower than prior 2 candles spread, lower than prior 2 candles volume, and a bear pin bar. This indicates reduced buying interest at higher prices, potentially leading to a price decline. Comment below what you think of volume spread analysis. If you found it helpful, drop a like and subscribe. See you next time.